we've seen the rupee mark a fresh low. It's breached past that 85 to the dollar mark. Um, whether we're going to see some extended weakness amidst this dollar strength, and what sort of repercussions would it really have on the rest of the economy? We have with us B. Prasanna from ICICI Bank joining in on the show. Prasanna, great to have you on the show. Firstly, let's try and understand the dollar index, which is currently at a 2-year high, rupee below the 85 to the dollar mark. Do you expect further rupee depreciation from here on? Or I should ask, for the dollar strength perhaps?
Yeah, I think bang on. I think the story of rupee depreciation is more of a story of dollar strength and a little bit of weakening rupee fundamentals. As you would know, I think the in the run-up to the elections and post the election results in the US, there has been a phenomenal amount of trade which is happening, which is what we call as a Trump trade. And that is basically playing into the policies of the new regime in the US, which kind of leads to higher bond yields, higher fiscal deficit, a stronger dollar, lower tax rate cuts, immigration and tariffs, not the least. So now, based on that, there is a view that the rest of the currencies in the world will depreciate as Trump goes about fixing tariffs on various countries. And while, of course, we acknowledge and understand that it's more like a transactional kind of a president is what Mr. Trump is. And it's quite possible that some of the things that we are talking of now might not actually bear in fruition in its entirety. The fact of the matter lies is that it's going to be a change for a lot of other countries. So what basically we are seeing in the global arena is US all the way, stronger dollar flows all getting back into the US. And that's been playing around now for nearly 2 months. So the dollar index has reverse course, went down to 102, 103 levels, now down, it's now up to 108.50. And the Fed also just a couple of days ago played its bit by talking less rate cuts as we go forward in the next year. To a lot of extent, it was expected, but I think Fed probably even was more hawkish than what the market's expectation were. So all of this has led to a very, very strong dollar and weakening currencies. And as you see around the globe, the kind of depreciation that other currencies have had, especially EM Asia, like you have the Korean won, which is depreciated in excess of 10%. You have the South African rand, which is depreciated close to 5%. The Brazilian real is depreciated as well. So when you look at all the emerging market currencies, you see that there has been a lot of depreciation. And in relation to that, the rupee, even though at the nominal level has depreciated, has, I think, depreciated much less. And that's because the RBI has been probably standing and intervening on the buying side of the INR.
Take your point, Prasanna, there that dollar has been strengthening and there has been a ripple effect on the emerging market currencies. But on the other hand, Prasanna, if we compare INR with the other emerging markets currencies, then we are still an outperformer there. Do you think that this leaves a case for further rupee depreciation like before central bank's intervention?
So, yeah, I think the outperformance is there, like I referred to earlier as well. And the fact of the matter is the fact that RBI has been intervening in the currency market, and it has outstanding forwards short position to the extent of more than $50 billion. And they have been intervening in NDF market as well. Going forward, we do feel that it's going to be a depreciating INR because RBI will do little to change the direction, but will kind of play along with the kind of global forces that's taking dollar higher, taking other currencies weaker. But whether the rupee will depreciate as much as what the rest of the currencies will, I'm not too sure, but I would more confidently say that it is on a depreciating path. I think what's going to happen to yuan, especially by January, is I think the single most important determinant of possibly what's going to happen to the INR. There are views going around that yuan is going to, the Chinese government itself wants to take the yuan to 7.5 as a kind of a countervailing force on the tariffs. And hence, if that were to happen, then you have to see some bit of depreciation happening in the INR as well. And having said that, over the last 1 month or so, even though RBI has been very aggressive, we have seen them letting the rupee depreciate a little. on a daily basis. So I guess, of course, we need to see more RBI speak and RBI action to determine whether there's a real change in strategy. But I think there has been some level of depreciation, and been difficult for them to go against the tide and not make it depreciate when rest of the currencies are depreciating and the dollar is appreciating.
Cheryl also joining in the conversation. Very good morning to you. Let's talk about the trade deficit, because if you look at our trade deficit, it has hit an all-time high level. No doubt they are actually looking at the gold import data there that is under review. But given the fact that India is a very import-heavy country, what is the implication? Because, weakening of rupee also is also one of the reasons why, trade deficit, and that one also has a huge linkage. So we are likely to see more depreciation of the rupee on that particular front. And do you think that in turn will nudge the RBI to change their strategy?
Yeah, so I think great question, Cheryl. I think the trade deficit was close to $37 billion. And even if you were to adjust for the $5 or $7 billion of double counting stroke calculation error that's doing the rounds, we are still talking about a $30 billion trade deficit for the month, which is a kind of a record high. So we have revised our current account deficit for the current year to 1.1% of GDP. And if not for the services doing even better than what we had expected earlier, we would have probably had to revise it to 1.4% of GDP. And also bear in mind that this means that for the current year, since the first 7 months is already over, if you look at it from a 12-month rolling basis going forward, the CAD is probably on a higher level if things don't correct. So we are eagerly watching the impact of what's happening on the imports and export side as we go forward. To some extent, the fact that the INR has appreciated against most other currencies, albeit having depreciated less against the dollar, actually is possibly led to this kind of a small worsening in trade deficit. So you are right in kind of alluding to what it does to the RBI rate action. So if you really look at what's happening to the macros, you would look at a combination of growth coming weaker, inflation coming lower, but not coming as fast lower as what we would like, and the external account, both the current account deficit turning a little bit more higher, as well as the BOP on an overall basis possibly being flat to maybe marginally negative for this year. Which is a big turnaround from what we were expecting earlier, where it was a big positive. That's primarily because of the capital outflows. It all means that it has become very tricky for the Reserve Bank when it meets in February. While we do expect Q4 inflation to come into the four handle, the last inflation number that the new governor will possibly have before the policy meeting is a number which will be closer to 5.5%. For the month of December, which comes out in January. And so that is not giving probably a lot of comfort for the RBI. And along with that, the fact that there is a BOP neutral BOP plus the fact that there is a dollar strength means that it's a very, very tricky situation. So while we do had a rate cut expectation, I think the chances of a rate cut in February is a little bit decreasing.
And great to have you on the show. And well, New Year wishes from all of us as well, and New Year too.
Thank you. Same to you.